Hello traders, this is Tom Willis from Opteck. Today it was 24th of September 2013. As you can see, from the beginning of the week, from yesterday, we didn't have a lot of liquidity in the market. It's logical because, yes, last week the Federal Bank, the FOMC, gave a bit of a shock to the market, and I can see the market is confused at the moment, and I can see that traders are, they rather stay outside of the market. In the meanwhile, I'm talking about traders in the forex market or stock, just to see how the announcements, the different situations that we can see around the world will affect the market, and once they'll feel more comfortable, more confident, they will definitely rejoin the market. Obviously, think about that. We've got a lot of traders out there. They don't want to place their funds in the bank. They want to invest it where they think that's a good probability of having a profit. And that's exactly what we're waiting for. We're waiting for the market to deliver an additional confidence for traders to make them feel more comfortable trading toward a specific direction, and then we can join. Today we've got an announcement regarding the Canadian dollar at 1:30 p.m. GMT time. That's a core retail sales. After that, we've got an announcement regarding the US dollar. I'm marking only the red announcements. Another announcement regarding the US dollar, and later tonight we've got an announcement regarding the New Zealand. I can tell you that generally the dollar gained a lot of strength for the last several days. Once the FOMC, sorry, pronounced, I'm talking about Ben Bernanke, when he pronounced that, unlike what was expected, that the Federal Bank will continue to support the economy and won't drop down the amount of support, then obviously that caused a lot of changes in the market, and we can see that that affected the dollar. The dollar lost a lot of strength in the market at that point, and we can see that that affected the commodities. Obviously, they've climbed higher. We know that the expression of a stronger dollar is a weaker commodity, and the other way around. So from that perspective, we know that the market began its movement this week with a bit of a shock, and we're waiting for the market again to deliver some sort of confidence so the traders will return to the market and will allow us to join to their movements. Now, I'm going to say something that you should always consider before you taking a trade: whether the market is suitable to trade on. And we've got days that we've got such low liquidity that we can't really trade. So that's very logical. I'm saying since Friday I said that it will be a very difficult time to trade, and we had several good potential trades, but still right now we can see that the market is fluctuating, and even a good indication, what seems like a good indication, eventually it's not such a good indication, and sometimes we should stay away from the market until we will see the market returning. And let me show you how I'm looking at the indication, how I understand from correlation whether the market is presenting good potential to trade or not. So let's go to the charts. Again, you can see that we've got a variety of opportunities today regarding specific indications. 1:30 Canadian dollar, 3 p.m. US dollar, and at night the New Zealand. I'm always saying that the New Zealand's time frame announcement on the New Zealand dollar aren't delivering a lot of potential, a lot of liquidity. But again, if you're trading the forex market, that will affect you. If you're trading the binary option market, you don't need strong and long movements to make profit. So let's go to the charts. I want to show you how I'm looking at the indication. Looking at the charts, I'm going to the Japanese yen measurements, and we can see that first of all the New Zealand is the weakest currency at the moment. After that, we can see that the pound is one of the weakest currencies as well. And we can see that the Canadian dollar, the euro, the Australian dollar and Swiss franc are somewhere in the middle, The Japanese yen and the US dollar are the strongest currencies at the moment. Both of them are the strongest, and the Japanese yen is even stronger than the US dollar. Now that's a 15-minute analysis. It's not a 4-hour analysis. On a 4-hour analysis, you'll see that the New Zealand is still one of the strongest, and the pound is still one of the strongest, and the Japanese yen is one of the weakest. So we can understand from that that once the market will receive confirmation, we're expecting the Japanese yen to express a lot of weakness, just as I said for the last several weeks. And I was right when the market climbed this movement over here. I'm still expecting to see that same movement occurring later on into tomorrow's session or even the day after that. That is my expectation, a continuance of an uptrend on all the Japanese yen charts, meaning expression of weakness on the Japanese yen and expression of strength of the Japanese economy. Okay. So how do I know if I've got enough liquidity in the market to trade, or this is a problematic situation in the market? I'm looking at the RSI of all the currencies together, and I'm looking to see whether I've got more than 10 digits separating the strongest currency and the weakest currency. Over here, we said the New Zealand is the weakest. It's 40. And the US dollar, we said it's the strongest. It's 47. Only 7 digits are separating between the strongest one and the weakest one. The strongest currency and the weakest currency. Meaning that we don't have a lot of difference in the market. We don't have a lot of liquidity in the market. I'm definitely expecting to see the strongest currency and the weakest currency expressing a separation of approximately 10 digits, meaning that if the dollar will climb up to 50 or a bit more than that, then we will have an indication that indeed the liquidity is returning to the market and we've got a good potential to join the market. Until then, the traders aren't joining the market, and that's the only logical thing to do, to stay away, just as they do. So at the moment, I don't have a lot of liquidity. I'm expecting an additional liquidity to return to the market once we'll have the announcements today. And again, I said that we might see moves affecting the charts only tomorrow or the day after that. At the moment, we can only wait for a good potential. Remember, not every day we've got trades, but today we've got an indication that at the moment we don't have enough liquidity to trade. So let's go over a few charts. I can tell you what is my expectation according to the strength indication. But again, I would definitely I won't involve the analysis with trading. I would just look at the perspective. You can see that the euro versus the Australian dollar, stochastic dropping down, RSI at the top. That's a good indication for an uptrend. Australian dollar, Japanese yen is not a good one. Over here, the Australian dollar versus the US dollar. Look at that. That's falling very nicely after the cross between the stochastic. A great trade. You can see that we do have some trades on some currencies that affect that reflect changes in the strength and weakness according to the Japanese yen indication. We do have several good opportunities, but again, the market generally is forming a choppy overlapping movement, a corrective pattern for a very long time until it will receive an additional confirmation. Just to show you the difference, look at that, the euro dollar. Over here, that was the announcement from the Fed, from the Federal Bank. We had an enormous movement, and since then the market is bouncing backward and forward, up and down, choppy overlapping movement, sideways corrective pattern. Until we will not cross this trend line over here, we will not have confirmation for traders. You know what? I'll even draw this one, and I'll add another trend line which will be more attached to the current market rate. Okay? So this trend line is an indication that indeed the market is returning for the uptrend. Now we've got a great potential, but the market needs to receive an additional confirmation to do that. We've got a great A dropping down, a B climbing up, and a C dropping down. A great one. And I can even tell you that I've got a 1, a 2, a 3, a 4, and a 5. So you can see that at the moment, it looks like the entire corrective pattern is complete, and we can expect to see a continuance of an uptrend. Let's continue, just 1 second. Gold is dropping down very nicely. And again, the Australian dollar versus the US dollar is dropping down very nicely. So we can see good potential on commodities dropping down. That concludes our session for today. I wish you all the best with your trades. Have a pleasant day, and bye-bye.